Hi everybody, Scott Miller with River City Mortgage and Financial. Welcome to this week's Market Minute, the week of November 29, 2010. I hope everybody enjoyed their Thanksgiving holiday, get a little break, take a little breather, spend some time with the family, overeat quite a bit, but now we're back to normal for a few weeks until Christmas and of course New Year's. But here's what's going on, and if you look back, which I know you won't, but to about a year and a half ago when I started doing these, I said, boy, rates are going to have to start going up. We're at historic lows. And here's a lot of what was going on. We saw that the Fed with that quantitative easing to QE2, and I sent an email out on that, that has created, there's a lot of tension and a lot of uncertainty with that. Even in the Federal Reserve presidents, they're not liking it, or Fed officials. We have 10 out of 11 that think that the concern with the quantitative easing is that it's going to cause long-term inflation and higher inflation. It's going to weaken our dollar. And as we start to see that, 10 out of 11 Fed officials believe that it's worth the risk to try to stimulate our economy. The big news is going to be Friday, this Friday, for unemployment numbers, and we're going to look at really the unemployment rate and wage inflation and see what's going on with that. But with that uneasiness, anytime the market is uneasy, it doesn't get better. It protects itself. And that's why we saw rates started ticking upward. Now, when North Korea attacked South Korea, there was that created some uncertainty to see what's going to happen. Is there going to be a big retaliation? Is that going to cause another conflict? Or what's going to happen? And when there was no retaliatory strike, so when that first happened, people, investors rushed to the safety and security of bonds, which helped mortgage-backed securities, but then that moved again on Wednesday. They moved away from that. So we're going to wait and see how that all plays out. But right now, uncertainty in the market makes the rates tend to go up a little bit. And when they start going up, every consumer asks the question, are they going to come back down? You're at historically low rates, which means eventually they have to go back up. Otherwise, they'd be normal rates. So we have to take a look at that. Now is a great time to be buying your new house or refinancing if you haven't done so already. And I want to be your lender. You can reach me at 763-509-7400 or via email. My address is smiller@rcmortgage.com. But do not get caught waiting to see what's going to happen with interest rates. Now is the time they're going to have to start sneaking up eventually. And you cannot have the Fed just simply printing money, weakening the dollar, and not have any repercussions of that. And that's we're going to start seeing that. When the question is not if, the question is when. You have to decide, do you want to gamble with those dollars now? So if you have any questions, I do want to talk with you about it and share this information with you. And good luck making a good decision. Make an educated decision. No one knows what rates are going to do. We can all make predictions, but nobody knows. And eventually you will be right, I guess. They're either going to go up or down or stay the same. That's all they can do. But make an educated decision and then move forward. So thanks very much. Have a great week. I'll talk to you soon.